Good morning, fellow option traders. This is Jeff, and welcome to not the daily scan today. This is going to be reflections on 2013 and what I will be doing to adjust for 2014. Reason why I picked today, a couple of them, is the devastating week that I had last week, and from a planned announcement perspective, it's going to be pretty quiet the first couple days this week, and then next week is when the insanity really starts. And I can show you that by just clicking on the 16th here. So we have red and gold stars all over the place all week, but here's the biggie right here. The Open Market Committee meeting, the Fed and Benny Baby will be having a huge effect on the markets next week, I do believe, because of the unemployment number that came out last week. Everybody's trumpeting that. 7% unemployment. Okay, whatever you guys say, that's the number that we hang on, I guess, even though labor force participation rate continues to sink. So there's less people working, but the unemployment number goes down. That's because the people that aren't working don't want to work. Jeez, why don't you guys come to your senses? But anyway, so I'm reflecting on last week. I'm not really going to do a scan today at all. I did do a scan, but I'm going to show you what I have come up with. Okay, so what I discovered in my reflections over the weekend was that I was pretty much getting off track and not focused on my actual trading plan, which I will be writing out this week and posting on my website. But I found out that I was getting too lax in my rules, and the charts were starting to get a little cluttered because there was just too much junk on them, too many charts, and I was overall getting distracted. So I went back to the basics. I did some back testing using ThinkBack, actually, and I made a discovery. And so I adjusted the studies on my charts, which I have posted up in the download section of my website on my blog, that you can go ahead and grab. And that's what I did. So what I discovered, let's go to the A+ list and let's take a look at Amazon. So what I discovered from the previous year, from about from August on, was that there is a particular pattern that gives you a good success rate. So here's the adjustments that I did to my studies. I cleaned them up. I changed them so that they would match, because we're going to be looking for color matches on the studies. We're still using the same basic methodology and stochastic dipping below the 20 and coming above the 80, but there's a secondary requirement there that I added. But what I discovered was that by making these colors look alike and getting them to match up and having a certain type of price movement, you end up with a very high success rate. And I will be switching over to, rather than a 20 delta, I will be looking at basically what amounts to a 50 delta, which is an at-the-money, either credit or debit spread, whatever you want to do, whatever you feel comfortable with. I'll probably continue to do credit spreads just because I've done them for a long time. But for instance, in this case, with the moving average moving up, and if you enter on this particular date here and you are bullish, then you could do a bear call or a bull call debit spread or a bull put credit spread. So you could do it either way. So it's a matter of whether you want to be basically a net seller or a net buyer of options. If you're doing credit spreads, you're really a net seller of options because you sold an option for more than you bought one for. So that's just where that comes from. That's not a big deal. All right, so you can see here too that I'm only looking at a single chart and I'm keeping it on my one page here so that I can quickly just run through my A+ list, which I may grow a little bit so that we could have more candidates. But here's what I came up with. Really, the basics here for the stochastic are the same, and this is the 1 to 5, and you can see here that it says version 2. And the same with MACD, it's still a 1 to 5, but it's a version 2 where I changed the colors. So I'm going to be doing a color match here. And what I'm looking for is a straight down red shot from above 80 or 80 or higher to 20 or lower. That's my setup. Okay, so now we have this setup. This could be a setup here. I didn't go back any further than this. So that's the setup to get ready to enter, and then we would be watching for a hookup. And what we need here is a match down here on the MACD. So let me just zoom in just a tad bit on that particular one. Let's see, that was March. Or I mean, why am I saying March for August? Crazy, man. All right, so we would be looking, here's our setup, red going straight down. We're not looking at the MACD at this time. So we have a red going straight down. We're in an uptrend at this time. You got a little red thing here, but really basically you're in an uptrend. And when you get this hook here, you're in an uptrend. So this hook, of course, doesn't happen until the end of the day. So this red one here is really for this candle, and this green one here is really for this candle. So you could be looking right away at the beginning of the day if you would like. I'm sure that these lines will wiggle around during the day, but I'm pretty sure that you will have a hook up here right away when the market opens. Alright, so you have green here, and then you would look down here at the MACD, you have green, and you have price above the previous day's close. So we opened here a tad bit lower, but then moved higher during the day. So this is a day that you would enter, and you would enter with an at the money. At the money. In this case, bull put is what I would do. And here, if we go to the Analyze tab and think back, this is the trade right here. So we collect $200, we have $300 at risk, rounded off. Alright, go back to the chart. And we would stay in the trade as long as our as long as our stochastic is climbing, and we're looking at %K here. %D, I just kind of put in the background, and I made them all match. This is a smoothing line, and this is a moving average, which kind of smooths things out as well. And it matches our 9-day for color, but this is the primary, are the red and the green lines that we're going to be looking at. So here we have, we're continuing red or green. We're green here, we're red down here, but that's okay. We need a confirmation of a double red. So the expiration that I would pick, did I pick a 2-week here? The expiration that I would pick, here's the rule for expirations. If it's on a Monday, you can do this Friday's expiration. But if it's on a Tuesday, then you would do the following Friday. So this should have been actually an expiration here. I think I may have the line in the wrong place. So let me move this line over here. This actually goes over to here. So this is where our exit is. And it just expired out of the money. So we got 100% on that one. And then if we go back here we have a red line coming down. It's just touching. And if you watch these numbers up here, if it's red, it matches the color here. So here we are red, we're down at 20.7. So this value right here, 20.7, that's close enough for me. That's only 0.7 away from 20. So we have a red line above 80 coming down, and then we get a bounce off here. We have a nice day that day. Price moves up. We have green, so we enter with an at the money bull put, and it's right here. We do it at our short's at 305. We get 223 credit, and we have $275 at risk. I go back to the chart. All right, so why did we exit this one early? This is on a Tuesday, so this is the expiration that we're looking at on this date, and we exited this one early. So, all right, here on this day we have a red stochastic, but we still have a green MACD, so we're going to stay in the trade. Here we have another red stochastic, but we still have a green MACD, so we're going to stay in the trade. Then on Monday we get a red and a red right down here, so we would exit and go over here, and we would exit, and it would cost us 65 cents to get out of this trade. So we collected 223, and then we paid 65. So we ended up with, like $150, $60 out of this thing roughly. All right, so when does our next opportunity arrive? Well, here we're still in an uptrend. We have a solid red down, and then we get a hook up on a green. But we don't have a match on the MACD, so we wait. Not only that, but our moving average turned a little red there too. So we wait one more day, and here we have price moves above the close. The close down here, price moves above it. We get a green stochastic, we get a green MACD, and we jump on the trade. And we're green, and then we turn red here, and we turn red here. We get out on this particular day. You have to watch these towards the end of the day to see what's going on. So everything that's done in the think back is end of day pricing. So here we have we collected 277, and we get out. It costs us 254 to get out. All right. Back to the next trade. We have to wait a while for the next one to set up. And here's a setup. We have a solid red down. We touch here. We're at 19 point. Watch this number up here. We're at 19.22. So next day we look for a setup here, and here we have it. Price above, green and green, and we get in at the money. And we run up here to expiration, and it's 100% successful Going back to the Analyze tab, we collected 229, so we had 270 at risk. So the deal here is, even if you completely bomb on a trade, you're almost at a 1-to-1 risk-reward ratio. So even if you don't exit early, if you have, say, 2 winners to every 1 loser, well, you're still going to make some pretty good money. The only thing is, you're not going to get many setups, you're not going to be trading very often, so you're going to have to go in heavy, because according to the things that I looked at, you're going to be pretty successful. So if I look at this on an Excel spreadsheet, I have the trades all down here. The first one expired out of the money all the way to expiration. Then this next one didn't. We had an early exit. We collected 223, cost us 65 to get out. And then this 10 October one, 227, that expired out of the money. Completely successful. And the next one, on the 15th of October, yes, that's not right there. I need to delete that there. Okay, we had an early exit on that October, and then November 5 trade expired out of the money completely. So we have a all right, what's wrong with you here? What happened? Hang on. Yeah, sure, I'm adding up the wrong column. Idjit. Alright, let's just delete this. I know what I'm doing. Yeah, that's better. Okay, so you still end up with $565 out of these trades for just Amazon over this time period. So does it work for everything else? Well, yeah. Also went back, I didn't do this kind of detail on Priceline, but I also went back on Priceline. I went back on about 6 or 7 of the A-plus stocks to check this out. Here we have the solid red down, no green. Can't do this one. There's a green hit in here. You could do this one, but guess what? You don't get confirmation. And I'm only going to wait like 1 extra day for confirmation. And if I don't get it, I'll just pass. Yes, it would have worked out, but I will just be passing on it because I want the higher probability, and these seem to work out to be high probability. So we get in, we have a red down, and we get in on this day at the money. This would be also around 200, 250 for this one. And okay, we're all right on this day. Here we have a red down on stochastic, but we're still green on MACD. So we continue to stay in, and this goes to expiration with a successful expiry in the money. Okay, same thing with this one. Red all the way down, 80 to 20. And then we get green up, but we still have red down here. So we wait 1 more day. And then we still have green up on stochastic. We get our confirmation on MACD. We enter at the money. And we ride this one all the way to expiration. We have red down here, but still green up here. Red down here and still green up here. We stay in, and that one expires in the money. Here we have one red down all the way, green up. Get in on this day, green up, green up. Get in on this day at the money. And expiration day we get a double red down, but as I said, these only show up at the end of the day, so you would probably ride this one out. Even if you did exit during the day, you'd probably exit it would cost you very, very little to buy this back at this time. And these are all weeklies, of course. Alright, so if you go back and you look at other stocks, like let's say like LinkedIn, I think I did see here, if I look at LinkedIn, Let's look at LinkedIn for today, or at least just recently. Here's LinkedIn, solid red down. Okay, we got green and green. We have a confirmation. So we get in on this day, sometime later in the afternoon. You got to be looking at these later in the day. And we have green up. This pretty good deal here, I think. And we would get in, and with expiration over here, and we'll see if this works out. And let's see, look at Netflix here. So here we have a solid red down, all right, on Netflix, and then we have a green hookup, but we're still red down here. We would wait another day. We'll see what happens today. But for right now, that's a no-no. Just as an example. I hope I'm not confusing you guys. Okay, so the setup. All right. I give you the code for these on my website, and I'll show you in a minute. But here, what you want to do is, if you want to see these numbers that are in here, you have to click the show title. I don't care about the bubble over here. I really don't care about that, so I uncheck that. You want to show the plot. So this is the stochastic, and I just set up the full K. Percent K is the red and the green line. I made it thicker with a 3. I drew it as a solid and draw it as a wavy line. I drew it as a solid line. I could have made it dashed or dots or whatever, but that's the way that I drew that. And you can see that it says down here, these plots, colors are dynamically set. That's in the code that you get. And the same thing with full D or percent D. I made that 1 with, I'm still showing the title, no bubble, and I'm showing the plot, and I'm showing the entire study. So overbought, that's these lines here. Oversold is these lines down here, and then I got the 2 mid lines, the 2 white lines, which I probably won't be paying very much attention to in the coming days, at least not right now. And then here for the MACD, I have this thing. I'm not even sure what the heck that is. I don't even show that. I just shut it off. So the average is here where the plot's colors are dynamically set. The average is this line, the magenta and the white line. I have that as a 1 with solid line. And then the difference is the red and the green line, which I have as 3 points wide. And the style is still the same. And again, I show title and show plot, no bubble on these. So then what I do is I take the studies once I have these set up, and I save the study set, and I call these 1 to 5 dark version 2. Alright? And then the same thing and with the chart. So when I save the chart, I say save style, and I'm saving this as version 2 because I'm going to include the study set as shown here. The study set, which was version 2 also, so they all match up. And I say include the study set, and then I click OK. And it already exists, but I'm just going to overwrite it with what I have right now. Now, I'm not going to be paying any attention to these person pivots. So I could shut them off or just remove them, but I'll just shut them off for right now. And so they will disappear. So we're not really paying attention to this 9-day moving average, which is an exponential. I suppose I could remove that too. Alright, so let me just jump over to my blog here. Okay, look at this handsome guy. haven't changed much except my hair is shorter. That's the only thing. So you go to the downloads page, and here it is, Option Guru TOS Studies version 5. And also updated the A+ watch list here. Worked a little bit over the weekend to figure out why I couldn't get downloads to work correctly, at least new ones, but they're working pretty good right now. So again, this is optionguru.com blog downloads, and that'll bring you to this page, and you can just click the download and away you go. Okay, I think I did everything. We do have a couple of trades that might be setting up, but I'm not going to worry about it today. It's so quiet today, I don't really think I think the market's going to be pretty much directionless, so that's the way we're going to live with it for today. And I'm going to not call this a scan on YouTube. I'll think of a title before I post it, just because I don't want it to look like everything else or fool anybody into thinking that we're actually doing a scan. So this is a little bit long. You may want to keep it in your back pocket. There's a handy tool called YTD Video Downloader. Let me move this over here. I don't think I can move this over. Can I? Yeah, I think I can. So this little doohickey over here called YTD Video Downloader. There's a free version of it that you can use to download videos, and if you want to, you could download this video and you would have it like on your PC or whatever for safekeeping forever and ever. Wouldn't that just be the cat's meow, I guess you might say. So that's it for this particular video, which I might call Confessions and Modifications. Confessions of 2013 and modifications for 2014. I guess, I don't know, something like that. But it's previous to the end of the year, and we'll see what kind of stuff sets up in the coming weeks. You know, the holidays are coming up, and New Year's and all that kind of stuff, and you don't know what's going to happen. And again, Uncle Ben next week. Just keep an eye out for that, because if he says he's going to pull back on his $85 billion a month, you can bet that the market is not going to like that. So anyway, that's it for this video. Thanks a heap for watching. Have a great day and happy trading.